All right, hello everyone, and welcome back. It's the end of the month, so it's time to check in again on my wheel strategy in Robinhood and just see how things are going. I feel like Medical Properties Trust at this moment has maybe reached a little bit of a bottom, but we're going to uncover that and take another look at energy transfer. I know in the last video I mentioned I may be looking, or the last two videos I think, I mentioned I may be looking for another asset to get into. I have yet to be able to find one that I feel good about, especially in this market with kind of all the uncertainty that's kind of going around in the economy and in the world at large. But for now, I'm sticking with Energy Transfer and Medical Properties Trust. So let's go ahead and dive into that. And we'll start with my spreadsheet and kind of run through everything and see how it's going here in month number 7. Okay, so first up on the screen, I've got the spreadsheet pulled up. So I think I only added about $19 to the bottom line this month. I added another cash secured put. The put that I had open, let's see, where is it? Right there for 19 cents. I was able to close it for 15, so we'll take a look at that. Added another $19 put. Was able to go a little bit further away from the money. Got it at $4 instead of $4.50. So maybe could have got a little bit more aggressive and gotten $20-$30 out of a put that was at $4.50. But with prices seeming to fall just every single day, I was nervous to go too close. That way, if it does get assigned, I'm getting the best possible price. So I was happy with 19. By making that concession, I've pretty much given up being able to meet my $300 goal. The only way I would be able to do it at this point, I would basically have November and December to try to make up the $140 or $138 that I would need to get there. It's not impossible, but it's not as conservative as I've been in this account. It's not likely to happen. Now I'll probably end up somewhere close, maybe around 250, 260. So really could end up being a really good year. Just looking at the size of this account, so I can't be upset about that. But the likelihood that I get to my $300 goal at this point is going to be minimal. Right now, I've gathered 130 shares of Medical Properties Trust, so hopefully it can rally back. And if it does, I'll be sitting on a nice, kind of a nice profit. If it continues what we've seen all of 2023 and the latter half of 2022, then more pain is ahead. Currently, my adjusted cost per share is $6.02. My average cost per share, just without factoring in the money that I've made on Medical Properties Trust, is just $7.05. So the current market price for MPW right here, you can see the market price is $4.90. Right now, I'm sitting with $162 in my bottom line. Let's go and take a look at the income. And you can see it's kind of hard to see, but you can see if I hover over it, I did add another $19. We'll have a little bit of interest income coming in at some point here in the next few days. It may already be there. I may just not have accounted for it. But right now, just have not been able to get close to this $58 a month. If I had, I would. If I had done that a couple of times over the last 7 months, I would have made my profit target and then some. But I've been ultra conservative because the state of the market just has not been good. One thing that I haven't talked about that it's kind of come to the forefront of my mind is that when you're trading the wheel strategy, or as I'm seeing here, when I'm focused just on the wheel strategy and nothing else, what I'm seeing is a lot of times we are going to be down and we are going to be collecting the put income or the premium from the puts. We're going to be making the interest or the dividends, and the stock that we're holding or the stock that we're trading is going to be going down. And so we're going to be looking at a loss. But at some point, you'll reach that intersection where the amount of premium and the amount of dividends and stuff you've taken in has finally caught up to where the price of the stock or the price of the asset is at that point, if that makes sense. And so right now, Medical Properties Trust is down well below my adjusted cost per share. So I've just got to keep collecting that income until I get to a point where Medical Properties Trust is going to pop back up at some point, hopefully, which is kind of hand in hand with the other thought that I had. On almost every stock or option that I trade, at some point I'm down. In fact, I spend the majority of my time down on whatever position it is. It's only occasionally that I get the price move in my favor. Whatever it is I'm wanting to happen happens, but it happens very briefly, like maybe over a day or 2 or 3 days. You get the move that you want, and it takes you pretty much where you want it to go, which is why I think it's so important to have a profit target and to have your this is what I'm looking for, this is what I need to have happen, and then go from there. The other alternative is just to buy and hold forever, and I don't know that I want to do that with Medical Properties Trust, although it may be a good one. I certainly hate buying stocks and then look at them 5 years later after I'd sold them and see that they're absolutely crushing it. And Discover Financial is a big holding in my personal account, just as a side note. And that was one that way back when I started my investing journey, I think prior to the 2008-2009 crisis, I just liked to Discover. I thought it made sense to own it, and I bought it for, I can't remember the price, but I bought that and Apple actually at really good prices. Apple went on to split once or twice, and their price just continued to skyrocket, so I would have made a killing on that one. And then Discover Financial has continued to do well up until this kind of the last year or two. It's kind of fallen down. But in any case, it's always uncomfortable to buy stocks or own stock at any point and then look down the line and see that it would have made you a mountain of cash. So I've got the capital and the buying power to sell another put or to possibly sell a covered call. And so if you're seeing this video and you have seen what I've been doing and seeing what I'm doing today, do you think I should sell a call on Medical Properties? What I don't want to do is I don't want to cap my my upside potential. I want it to be able to rally up to the level that I need it to get to. I just don't. I'm kind of nervous to cap it with a covered call. So if anything, what I'm leaning towards is selling another put just to kind of boost my income a little bit. Really got to drive this adjusted cost per share down to around $5. You can see it's at $4.90 right now. Got to get that down to about $5 or even below that. But there's not a lot of premium above $6. Anything above $6 is pretty much a wash. I would basically have forfeited any income, forfeited any money that I could have made. But if you look at it in the sense that if I was just holding Medical Properties Trust, I would be down by almost $300. So to only be down, I think I'm down 118, and we'll see that on Robinhood shortly. I'm not down by that much. So looking at this compared to what I am actually down, it could certainly be a lot worse. That's Medical Properties Trust. Let's take a quick look at Energy Transfer. I'm currently holding 20 shares. I just had put an order in today to buy 5 more shares. I didn't realize the market kind of fell down hard, so I didn't see it at the time, or else I would have put an order in across below the kind of my 5% line to buy 5 more shares. So I would have put an order to buy those 5 shares on Friday, but I just didn't see it, and it didn't get all the way to the level where I have my alert set. So all right, now let's go and take a look at Thinkorswim. Let's kind of transition from there. And so I've got Energy Transfer. Earnings are coming up here on 11-1, so we've got earnings coming up. I don't know what caused the stock to drop. I didn't look at any news about it, so I don't know what caused kind of this massive sell-off. It might have just been the overall market. Maybe the energy sector as a whole was down. It's coming into what could be a nice area of support. You've got the standard deviation channel there, you've got the 200 period moving average, and you've got this point of control. It might kind of just be setting this range, and it might find kind of this area here as an area it just wants to chop around in. But regardless, it went down below my 5% line, so I did put the order in to buy 5 more shares. So let's take a quick look at Medical Properties. So we had this down day right here on 10/25 where I bought 5 more shares. You can see it dipped down below my 60% line. So this thing has fallen from here all the way to here. That's a 60% loss. Of course, it doesn't, dollar-wise, it doesn't look like that much, but percentage-wise, you can see how substantial it is. But the earnings the other day were really promising. The company said a lot of good things, and it seemed to have investors more confident. Hopefully, we can get the rally in the days ahead, and I'll be really happy if we do, because I have not put a covered call on. And I know that's part of the wheel strategy, but I'm just trying to be as smart as I can about how I'm approaching this. Because at the end of the day, just like any of you, I want to make as much money as possible. I don't want to set a covered call and have to look back and say, oh man, that was a mistake. Unfortunately, that's kind of one of those things. Looking back, and if the price continues to go lower, I'm going to say, man, why didn't I open a covered call? Could have at least taken that money, or at least taken that premium. But right now, I'm hoping it will rally at some point in the next few months. But just haven't seen that yet. Still feel like we have more downside to come before we get to the level where people are going to see this as, yeah, I've got to buy it at this level. It'll never be at this level again. And so if you are watching this video and you're interested in real estate or real estate investment trusts, Medical Properties may be worth keeping on your radar. While I do feel like we're gonna breach this $4 area, at some point in the next few months, maybe even down as low as 3. When it gets to that level, I feel like it's going to be, assuming they don't have anything catastrophic, and they don't get taken over, or they don't sell out, or they don't delist or reverse split, or any of those things that would potentially hurt us as investors. Even if it goes down as low as $1 or $2, as long as it continues, at some point, big investors are going to see that and say, it's never been this low, it's never going to stay this low, they're too good, they make too much money, and they're going to drive that price back up. That's kind of my assessment at this moment. Taking a quick look at the premiums that are available. Again, I sold the $4 one when it was about 19, so it made a couple of dollars there. Not a lot of premium without going to about 30 something days out. Still better than energy transfer, so that's why I'm continuing to sell the premium there. But that's what I think about medical properties trust and energy transfer. Let's go ahead and turn our attention now. Take a look at Robinhood, and we can kind of see everything that's happened. So just taking a quick look at where my cash is at and what it's doing. I've got 1,193. 400 of that is being used as collateral for that short put, and then again I put that order on to buy energy transfer. Currently got about 93 cents in interest year to date. You can see I'm down by 118. You may remember from the spreadsheet I was down by about $300 on medical properties trust. So that premium and those dividends are certainly making a difference, and so I'm only down by 118, which means if we do get any rally in medical properties trust, it won't take nearly what it would have taken for me to see a profit. So right now I currently have $728 worth of buying power, which means I'm more than capable of selling another put in medical properties trust if I feel like the price will continue to rally. Haven't done that yet, again being ultra conservative. So there's the order that I put on to buy 5 shares of Energy Transfer Partners. Here's the order I had the other day when price dipped down to buy 5 more shares of medical properties trust. I think at the end of the day, I'm going to try to gather as much or as many shares as I can of medical properties and energy transfer. At this point, it's looking like maybe I won't be doing the wheel strategies per se on energy transfer. I may just be doing covered calls. We'll see. At the moment, I've gathered over the course of this 7 months, I've gathered a large number of shares on two companies that could be really good companies in the years ahead. So certainly can't be upset about that. There is the one put contract that I sold here for $4 on medical properties. There's the details for that. Did that on 10/18. And so as soon as I can close that for maybe $3 or $4, I will, and I'll reopen another one. I'm hoping to be able to get 2 more puts sold before the end of the year. These last few puts are any indication, I should be able to get around $20 or so for each of those. So could potentially add another $40 that way to my bottom line. And then of course, I think there's one more dividend before the end of the year that I'll be receiving. Bought the putback that we talked about last time, bought that for $4. Probably could have bought it back for a little bit less, but was able to get filled. The stock lending, again, I've pretty much stopped tracking that, but they paid me a penny at the beginning of the month. Energy transfer, I did buy 5 shares on October 6th, but that's all the history. Not a lot to show you there, but there was a lot to talk about today. I wanted to make sure I shared everything with you. So that's all my thoughts, and that's how everything's going at this moment. Down by $118 could certainly be worse. What I realized in just focusing on the wheel strategy is I'm spending a lot of my time in the red. And the reality is, I think for anybody that trades the wheel strategy, you're going to spend a lot of time in the red, no matter what you're trading, whether that be medical properties trust, whether that be Apple or Microsoft or SPY. You're going to spend time in the red, and you're going to sell puts or you're going to sell calls that the price doesn't do, the underlying price doesn't do what you want it to do, which is going to force you into a situation where you could be in the red. And so then you're just going to have to continue to collect that premium, continue to collect that income, continue to collect those dividends until you get to that point where the price does do what you want it to do. And then you have to make the decision. If you have your profit target or you have your goal in mind, you can exit the position and start over, or you can look for a new asset. Whatever the outcome is up to you. But what I'm realizing is you are going to spend a large amount of time in the red. Now, in a perfect world, you would never go red. You would stay green and everything would be great. The reality is, I think you're going to spend some time in the red, especially in a market like we're in now, where more than most things are falling. And it doesn't look like any relief ahead anytime soon. So stay safe out there. And until the next video, guys, God bless and take care.